Another wild week in US politics has produced more than its fair share of volatility. First, there was President Trump's COVID-19 infection and his subsequent return to the White House. Then there was his abrupt call for an end to negotiations on additional stimulus until after the election, producing a heavy backlash, but only to be followed by what appears to be some backtracking on Trump's part. Despite these mixed signals, markets steadied as the week progressed, with investors increasingly convinced that a broad US fiscal aid package remains more probable than not, even if it's delayed until after the election. The polls also show growing chances of a Democratic Party sweep as well, which would tip the scales toward an even larger and more comprehensive fiscal relief package. The S&P 500 is up almost 3% since late Friday, but memories of 2016's election upset and the still non-negligible chance of a contested US election should keep markets on edge with Election Day less than 4 weeks away. The Aussie dollar slipped about 1 US cent midweek to 71 as market hopes for more US stimulus were dashed, but steadied in line with equity markets and is finishing the week overall unchanged, just shy of 72 cents. A sizable US fiscal deal would be good news for the US economy and might even delay more Fed easing. In more normal circumstances, that would also be good news for the US dollar. But growth and interest rate differentials are of secondary consideration for FX markets at the moment, which continue to grapple with a once-in-100-year global shock. While that is the case, FX markets will react to any major policy developments, such as a large US stimulus, by pricing in a more optimistic global outlook via risk sentiment channels. A US fiscal deal and signs that Joe Biden and the Democrats could retake US government is then altogether widely seen as negative for the US dollar. Closer to home, policy settings in Australia remain strongly geared towards supporting the outlook. The government bringing forward stimulatory tax cuts and announcing generous business investment write-offs in the 2021 federal budget, while the RBA said that they continue to weigh additional monetary easing in this week's policy statement. An RBA November rate cut is now mostly priced in and should not ruffle Aussie dollar too much, which remains glued to global equity sentiment. While it's hard to imagine the Aussie dollar gaining much more ground above the 72.50 level next week, it's likely to be a very different story closer to year's end. By then, US election uncertainty will be out of the way and a US fiscal deal should be reached, opening up more topside potential for the currency. We'll speak again next week.